Joining us around the desk as our guest host this morning, Steen Jakobsen. Steen is Group CIO at Limus Capital Partners. Good to see you this morning, Steen. Thanks very much for coming in. Just give us the headlines then. Steen Jakobsen's view on the markets and how you make money at the moment.
I'm a grumpy bear, and it's a hard time being a grumpy bear, but I think you have to expect the fact that this is a little bit like a boxing match. In the red corner, you have the U.S. consumer, and the consumer overall being a little bit have been down on points. And in the right corner, in the blue corner, you have the banks, the mega banks, making big bucks based on cheap funding from the government. And then you have a referee, the U.S. administration predominantly, who is using the rules of synchronized swimming for boxing, and that makes the game very confusing.
You must have lost a lot of money then, one assumes, over the last 6 months, if you've been a grumpy bear through the last 6 months.
No, I've not been through the last 6 months, but right now, since mid-October, we've sort of felt the market was putting in a top. So since mid-October, we've been grumpy bears.
Right.
Really, the market's going nowhere, to be honest. The dollar is slightly weaker every day, as we talked about earlier this morning. But the fact is that you have to, and everybody right now are beta chasers. Everybody is just going for the same game. And I think there's one thing that people have to keep in mind, that when correlations of all assets becomes one, it's either in a crisis situation or in the euphoria is the biggest. And I think we're sort of getting into the concept of euphoria here, because correlation, you can have the risk on or risk off, and then you have to choose whether you want to drive a Formula 1 or Formula 3000. Right now, everyone is in the Formula 1, and I think it's risky.
So what's changed? I mean, make the case as to why things are different now from when they were pre-October. I mean, obviously, these assets are at a higher price than they were, but the liquidity is not going away at this stage, and we continue just to get messages from politicians that they will do what is necessary to continue to try and feed this recovery.
Well, first of all, I think let's take the dollar, which I think is really at the pinnacle of what. If you can figure out where the dollar goes, I think you can figure out where the asset goes, because ultimately the dollar story is a Chinese story. But just on the dollar side, people keep talking about the dollar should be weaker and we're standing in front of a crisis and vice versa. But people forget we have moved from 84 in 2000. So 10 years ago, we was actually trying to protect the euro against the dollar. Now we have a euro at 150, around 150. So we already move a significant distance. The second thing, that the whole recycling of the dollars was based on the fact that U.S. runs a current account deficit. And you imagine what's going on right now is obviously that U.S. current account is improving massively, first of all, which means that the circulation, recycling of dollars, debt into the world economy is smaller. China is having still is still having a decent amount of dollar on the books. And then secondly, you have to remember that the dollar side of the story is it's not going to go away, because people keep talking about the SDR. Listen, Jeff, if you want to do an SDR, it's a basket. You can construct it yourself. You don't need to go to the IMF or anybody else to have an SDR. So the SDR was such a great vehicle to institute this. Go do it. I mean, you're free to do it. It's a free world. I mean, despite Darling, I still think you can actually do foreign exchange.